Good morning, I'm Gary DeWaal, and this is Bridging the Week for December 23rd, 2019 to January 10th, 2020, and today is January 13th, 2020. Happy New Year, as this is the first version of Bridging the Week in 2020. It was not part of the Golden Globes or Oscars ceremonies, but last week, both the Securities and Exchange Commission's Office of Compliance Inspections and Examinations and the Financial Industry Regulatory Authority issued their top inspection priorities for 2020. Separately, the Commodity Futures Trading Commission's Division of Swap Dealer and Intermediary Oversight somewhat rolled back the immediate urgency for future commission merchants and swap dealers to address all the recommendations of DSIO in its December 2019 advisory regarding Chief Compliance Officer annual reports. I just returned from Colorado and hiking the Rocky Mountains, where I was not eaten or mauled by any bears, mountain lions, or other animals. So I could begin returning to a New York state of mind and concentrate 100% on work. Let's get started. Last week, both the SEC, Office of Compliance Inspections and Examinations, and FINRA issued their annual examination priorities. Each regulatory entity identified many common areas for their 2020 reviews, including sales practices, preparation, and compliance with new requirements under Regulation Best Interest, Fintech applications such as digital assets, and information security. As in prior years, OC noted that it will prioritize the protection of retail investors in its reviews. OC indicated it would also continue to identify and examine registrants who are involved with digital assets. Among specific areas of attention will be suitability, investment management and trading practices, protection of client funds and assets, pricing and valuation, effectiveness of compliance programs and controls, and oversight of outside business activities. OC will also prioritize review of investment advisors that provide their clients automated investment tools and platforms commonly known as robo-advisors. Additionally, OC proposes to continue to prioritize information security at registrants, and as before, OC will review broker-dealers and investment companies' anti-money laundering programs, including the monitoring and potential reporting of suspicious activities, and emphasize review of never before or not recently examined investment advisors. Similarly, FINRA indicated that in its examination members during 2020, it would focus on sales practices and supervision, market integrity, financial management, and firm operations. Among other things, FINRA intends to consider how firms comply with their obligations to help prevent market manipulation, report certain transactions, and handle short sales. FINRA will seek to determine whether firms engaging in digital asset businesses have filed a continuing membership application with it, how fair and balanced are relevant marketing materials, whether firms imply that digital assets businesses being conducted through a non-SEC registered affiliate are being overseen by a registered broker-dealer, and what controls and procedures does a member have to support its digital assets transactions. FINRA will also examine the robustness of members' policy and procedures to protect customer records and information in firms' business continuity plans. To me, the beginning of every year provides a natural opportunity for registrants to review their written policy and procedures to ensure they accurately reflect current requirements and practices and, if applicable, current personnel. See my further thoughts on this in the article version of Bridging the Week at www.bridgingtheweek.com. The CFTC's Division of Swap Dealer Intermediary Oversight advised future commission merchants and swap dealers that guidance it issued on December 4th, 2019 regarding Chief Compliance Officer's annual reports was more aspirational than mandatory for such registrants' 2019 reports to be filed this year. Acknowledging the late issue of its guidance, DSIO said that while expected chief compliance officers, quote, to take reasonable measures, end of quote, to institute the guidance's recommendations this year, it expects CCOs, quote, to consider those recommendations more completely when preparing their 2020 annual reports, end of quotes, to be filed in 2021. This is confusing, and what does the instruction really mean? See my thoughts on this in the article version of Bridging the Week on the website. And finally, at the end of 2019, two CME Group exchanges, the Chicago Mercantile Exchange and the Chicago Board of Trade, settled a number of disciplinary actions involving allegations of wash trading, disruptive trading, and speculative positions violations. In the most interesting matter to me, Andrew Labara agreed to pay a fine of $60,000 US to the CBOT and incur a 10 business days all CME Group Exchanges access bar for engaging in disruptive trading. According to CBOT, from August 31st, 2015 to January 8, 2016, Mr. Lambara would place large orders in U.S. Treasury bond futures on one side of the market and smaller displayed iceberg orders on the other side of the market with the intent to have other traders transact opposite his smaller displayed orders. CBOT said that Mr. Lambara was successful in executing more of his smaller displayed orders than his larger orders utilizing this strategy. CBOT alleged that this strategy violated a CBOT rule that precludes entry or causing to be entered actionable or non-actionable messages with the intent to mislead other market participants. The provisions of disruptive trading relied on CBOT to prosecute Mr. Lambara is not often used. See my overview of disruptive trading at the exchanges level in the article version of Bridging the Week at you know where, www.bridgingtheweek.com. Well, that's it for this week's edition of Bridging the Week. As always, there's more information in each article and more articles on the article version of Bridging the Week on the website. Check it out. I'm Gary DeWaal. Have a nice week, and until the next edition of Bridging the Week, ciao.